Steven, yesterday Feds announced to cut interest rate by 50 basis points. I was jumping up and down saying hallelujah, and in few minutes I was coming to the real world thinking, really? 25 basis points is what we all thought it's going to be. 50 basis points? It still feels surreal. It moves across like a hot knife slicing through the butter. Nobody knew this was coming. So let's review history. Since this isn't our first rodeo, going up, down, up, interest rates have always played this game with us. So let's break it down. Back in 2007, interest rates were sky high. But in 2009, it just fell down to the flat line. Again, in 2014, it started climbing up. And in 2020, it started chilling and crashed with the COVID-19. 2022, 23, we started getting used to new norm, which is being the interest rate in 6.5%, 7%, even little over 7. We thought that was like being in 1980s. But then in July came a slight relief by Feds, giving us a little break in the interest rate prime. So mortgage rate came down and we felt this is going to be a nice smooth transition. So now let's talk about how this will affect you or to our everyday consumer. Buying real estate. Should you or should you not? If you're thinking about buying a home, this could be a game changer. Lower rates means cheaper loans. That's right. Your mortgage payment will shrink very small. And buying that dream house, which looked impossible just like in the beginning of the year, is now achievable. But wait, before you jump in with both your feet, there is more to this than meets our eye. When rates drop down suddenly, volatility rises. And as we really going to see prices drop, or could this spark a buying frenzy? Driving them back up, my advice, don't rush. Take a deep breath. Watch the market closely because this knee-jerk cuts often create uncertainty. Pay smart, but don't be last. What about the sellers? The sellers. They might feel like they are on a roller coaster. When rates drop, more buyers can jump in the market. But will they stay cautious? Will the prices fall down of the house? This is, again, unpredictable. Buyers are going to be holding out for the best possible deal. So it's a waiting game. It's all about who flinches first, buyer or seller. Here is the thing. Cutting rate like this just isn't some calm, calculated move. It's going to create a chaos. We have seen this before, and the market doesn't always react kindly until it creeps in and everyone starts wondering, is this start for something bigger? Are we headed into a downturn or just a soft patch? And when people don't know what is coming next, they get very cautious. They hold back, they wait, and they can freeze the market on its track. So how are you going to react to all of this? Are you ready to take the plunge into big purchases, or will you hold up and see where this wild rice is going? Is it going to go up, go up, go up? Or is it going to go up and then down, and it will be a new norm? Lower rates could spur more consumer spending, bigger loans for homes, cars, and maybe even that vacation you've been dreaming about can become true. But fear of unknown could keep wallets zipped tight. People prefer to save rather than splurge and commit. Market needs to be a little more stable for us to get the signals from the market. The bottom line, at the end of the day, it's all about how you play the game. The Fed may be cutting rates, but that doesn't mean you should rush to make major purchases. Move slowly, carefully, think about it smartly, and make an intelligent decision. Okay, so what do you think? Are you going to buy, or are you going to sell, or are you going to hold? Can you let me know through your comments so I know what you all are thinking? Please don't forget to like and subscribe and hit that bell so you never miss an update on how to navigate these crazy financial times. Catch you in the next video, and remember, money never sleeps.